Today, I'm joined by two of Malaysia's leading wealth educators from EquitiesTracker, Alvin and Andrew Vong. EquitiesTracker started in 1976, grew into Malaysia's publicly listed leader in investment data, research, and training, and are built on discipline and the pursuit of value investing. Now, Alvin, as CEO, continues that legacy, transforming raw financial data into actionable frameworks for retail investors. And Andrew, his role as Chief Future Officer, has tracked the rise of crypto since 2013, hosts the influential Future Proof Show, and helps everyday Malaysians navigate the exciting yet volatile world of digital assets. Now, today we explore how mindset means strategy, from value-driven equity to structured SC-regulated digital assets. And we'll review how retail investors can tap into institutional-grade thinking to build wealth that lasts. This is my favorite topic, and I'm sure the same with you guys, right? Obviously. But you guys grew up with that mindset because your dad is in the business, right? Was your mom as well? Both parents, or is it like a family thing, or
was it a family thing? I think no, it was definitely driven by my dad.
You're driven by
Sure, yeah.
by Jim.
Yeah, Jim.
Okay.
Yeah, founder, yeah.
The founder.
And I think our dinner conversations were quite different from our friends.
Oh, tell me about a dinner conversation with your dad.
Look, I guess the topics of discussions were pretty much centered around the subject of money, the business,
the business.
Yeah.
Economics,
Yeah.
world
Oh, wow.
affairs.
Yeah.
Straight up.
Straight up.
Yeah.
Dude, I
Yeah.
am so jealous. No, because now I know what I know. In hindsight, I'm like, dude, why didn't I just focus more instead of falling asleep in econ,
Right.
And now I realize that I'm all about, like, okay, I pay attention to Trump, all his moves, because we know that it affects every single person in the world, pretty much.
Yeah, pretty much.
Right?
Yeah.
So
Absolutely.
the
But I
mind,
can't say that I understood everything that my dad was saying back then.
Yeah.
It's just like absorption through osmosis, right?
Right. You had no choice.
I had no choice. Right? And then kind of later, okay,
Yeah.
then it starts clicking,
When did it start clicking for you guys?
For me,
Yeah.
so I did a degree in accounting and finance and IT.
Did you choose that, or was that kind of pressured or kind of ingrained to do early?
Well,
Because you want to help the parents out there, right? What to do, what not to do.
interesting question. Actually, it was chosen for me. So
Okay.
my first choice was I think it was a bachelor in I don't know, something else. And then second choice was because you get to pick, right?
Yeah.
So it's like the third one, I was like, I was pretty confident I'll get the first two, or
Okay.
get in for the first two.
Okay.
And then my safety school, right? I got my safety school, which was Bachelor of Economics.
Okay.
So it kind of it was kind of chosen for me.
Okay.
Yeah, I wasn't a great student, so.
Well, neither
Economically.
was I. That's why we're salesmen.
Yeah.
Andrew, how are you?
I did computer science.
Okay.
And then I went to business school.
Okay.
And so I kind of
MBA or what?
Master of Commerce.
Master. Okay.
Yeah.
Master
Yeah.
Commerce,
With
okay.
So and the funny story with getting into computer science was that I didn't really learn besides playing video games, I didn't really learn how to actually do the technical stuff until I was probably about 17 or so.
Okay.
Yeah. I remember coming home one day and I found this DOS for Dummies books on my bed.
Oh yeah.
And I picked it up and I started.
I remember what it
flipping
looks
through the
like.
pages.
Yeah, the cover.
Yeah.
Yellow and black.
Yep. Yellow black.
Yeah.
Yep.
The
Yep.
For Dummies series.
Yeah,
right?
for Dummies series.
And
Oh, it's been around
then-
that long.
Yeah, and
Holy.
I started trying things out.
Yeah.
And it was a step by step. It was really easy. I was like,
Okay.
I can do this.
Okay.
And that was kind of how I fell into computer science.
Oh, okay.
Yeah.
All right. And well, that came in handy, right? All of the background education?
I mean, it came in very handy now because
Right, with what you guys are doing. It's
what we're
relevant.
doing, yeah.
Yeah.
But not everyone. In fact, majority of the people end up studying. They're not doing something completely not related to what they majored in.
Yeah.
Right?
Yeah.
Yes.
Yeah.
I mean, okay, if I had to go back, I would have not done marketing. I would again, like same like you guys, like commerce and
Yeah.
like finance or whatnot. Even accounting, as painful as that sounds, comes in handy.
You know, here's the interesting thing, right? For me, accounting, I actually I don't even know I passed my exams. Because it was really when I started working in a workforce.
Yeah.
And my dad passed me this longish book. It says how to read financial statements. So you can imagine I finished my degree 2 years before that. I knew how to prepare financial statements,
Yeah.
but I didn't quite understand how to analyze them.
Okay.
So and then it was actually with practical experience,
Yeah, of
then it
course.
kind of just all clicked together.
As
right?
is most things,
Yeah.
Yeah.
isn't
You
it?
just gotta do it, right?
Right? Got to
Yeah.
do it. Get
Yeah.
in. Get your hands dirty. Fail.
Yeah.
Yeah.
Suck until you don't suck so much. Right?
Yeah.
And but okay, another thing is too leadership, right? Leadership skills. Was that kind of ingrained in is that what he taught as well, like leadership skills? Because now you guys are leaders, right? You're leading a company, a group, what's the word for it? Community, right? Because it's early on in the business for him. It's more community, right? It's basically, I would say, democratizing data-driven approach.
Yep.
Democratizing that because retail investors had a
Unfair
a
advantage.
very unfair advantage.
Yeah.
Right.
Yeah.
I mean, no, okay. They did not have they had a disadvantage.
Yeah, that's right.
Right.
Yeah. So what was the
So yeah, on leadership.
Oh,
and building
leadership.
because right now what I see, you guys are building a organization,
Yeah.
as well as a community, right? Two things. So it needs leadership skill sets and whatnot, right?
Yeah, I think it's that age old nurture versus nature, right? Is it leadership? Is it nature or is it nurture? I believe it's a little bit of both.
Right.
And I think that's why if you do your MBA, for example, you can study leadership, right? There's there is a subject called leadership that so you can be trained in that, I guess. But in terms of doing what we do, I guess it's I don't know, it just came naturally, right? I mean, it's just something that we're both pretty passionate about, and we kind of just went after it.
Kind of grew up around it.
Yeah.
I guess I learned my leadership. It's kind of just mimicking. I guess learn what my dad was doing.
As he's a leader.
Yeah. So
right?
just kind of
Now, okay, we're out here on the Olympian Mindset, where we focus on mindset because that's what really keeps anyone who wants to achieve greatness. That's pretty much the single factor, along with mentorship, that I've identified, right? Is there reasons why would you start with mindset in investment?
That's I think in investments specifically, you have to start with mindset. Why? Because physically, no one has an advantage. Right.
We're all
you can click a mouse and you can look at the screen. It doesn't mean that you click it faster, then you're gonna be better. So there's no physical advantage. So it has to be the state of mind and state of emotions, right? And that's really where you start from. Yeah. So state of mind is absolutely essential in investments, right? We often see professionals in the field. I always hear this old adage that they're like, "Oh, you did accounting, so you must be really good at investing." I mean, accountants, not many turn out to be good investors, right?
Right. Because it's quite micro, right, versus macro. Right? Accounting is quite specific, technical.
Well, no, I think like
right?
for accounting, the first rule of accounting is prudence. Right? And when you talk about investing, it's the completely opposite end of prudence, which involves taking risk, right?
Right.
So
managing
the risk as well, right? So very opposite ends. So a lot of people relate accounting to, oh, you know how to read financial statements and then you know how to invest. But I think, you know, accounting is only one element or one of the many elements that can help you in your success in investing. You know? Yeah.
Absolutely. And I think, okay, the next thing I think also often with investing is having maturity and patience. Right? Especially these days, we live in the world of having a button that you press now and you get everything now. Everyone's used to, especially in the AI, living in AI now, everything you get now. We used to everyone have a chauffeur on the press of a button, food show up to your door on the press of a button. So I think, especially younger generations, they didn't have that ability to or develop their patience versus our generation, right? I think we have a lot more patience.
We're old.
Do you think that plays a to our advantage in investing?
I think it does. I think we do live in a world of instant gratification right now, and it's that's been enabled because of technological advancements, right? The internet connects everything and everyone and the whole world together, and but I think as they say, right, patience is virtue. Sometimes, things take time. They take time to develop. They take time to grow. Our generation, I guess we're
a little bit more. We had to wait for our Saturday morning cartoon.
Yes.
Now it's like I want it now. They're so lucky, but in a way, I also kind of pity them. I said they didn't develop that. Which is a much needed mindset. In maturing throughout life and developing. Right. Okay, so with this in mind, for people, generally humans we want to get rich. We want to get wealth, build our wealth fast, right? Very difficult 20, 30 years ago, right? Oh, automatically your dad will probably say impossible. Wealth is built slowly. But in the digital age and the AI age, has that changed? Absolutely. Right?
It has,
And it's what we hear because of the digital alternative assets, right? So now I know that you guys are at the forefront of development, of pushing the limits with helping to make it a legitimate and a sustainable asset in Malaysia, right? You guys, that's what you guys are known for. Now, can you tell me where it all started?
Oh, I think he kick it off.
Andrew.
Sure. Okay, look, for those who don't know, Bitcoin, which is the first, I guess, digital asset.
The grandfather.
The granddaddy of them all, right?
Granddaddy.
That was introduced to the world January 3rd, 2009. And so now I remember, so when I was doing my postgrad, my master's, it was I had to write a paper, and the paper in that paper I talked about the concept of electronic money. So because I majored in electronic commerce, right? So it was e-commerce back then. So it was 1999, 2000. So that's during the dot-com boom. Right?
Yeah.
We were right in the midst of the dot-com
Yeah, it
boom.
was. Yeah.
And so that was the thing to study, because this was gonna change the world. It was gonna change literally the way we live. And so I remember doing this one paper on and I went down this rabbit hole, and I started to write about what life would be like with electronic money, because now that we're all connected electronically and there are no more geographical boundaries, then how do you pay for stuff? Well, obviously now we've got PayPal, we've got all these other options.
It's
but
great, right?
back in 1999, there wasn't that concept. So then I remember after writing that paper, I went and spoke to my economics professor about it, and then she introduced me to Paul Krugman, the economist, and so I started reading his work and stuff. Look, long story short, so I kind of, after I left, I was really into it. I left uni, started work, and then I got kind of just busy, and eventually
in Melbourne.
No, this was back here.
It was here. Okay.
Yep. But then I was living in Melbourne later on when I was working there.
Yeah.
And in, I think the beginning of 2012 or 2013, I started hearing about this thing called Bitcoin.
Okay.
And then...
So it took about 3-4 years before if you heard about it, and you're in the industry and you're looking out for it.
Well, it took... actually, it was 1999 to 2000. So it's about a good 10 to...
Oh,
13
okay.
years.
I mean from when it was launched.
Oh, yeah,
in
that's
2009.
Right, yeah.
So I started hearing about in 14, 15.
Yep. Yeah. So in 2013, I remember I was on a lunch break. I was walking down to in Melbourne, it was Lonsdale Street. There was this new mall that was out. So I went there, had a stroll, and I saw this Bitcoin ATM machine. I was like, oh wow. I've been hearing about it. I've been listening about it. Okay, well, so I fed it some money. Downloaded a Bitcoin wallet. Put my phone there so that it could transfer it. And that was how I acquired Bitcoin. And it was...
How much did you pay?
Oh, back then, I think the price of Bitcoin was, I think, about $850 per Bitcoin or something.
Oh, wow. Okay. Jeez. Don't you wish you can go back?
Yes.
You would have just emptied all your life savings, maximum,
Yeah,
borrow.
Yeah, that's right.
You need that leverage. That's the mindset, right?
Yes, that's right. Yeah. Borrow whatever I can and just dump it into Bitcoin, right? But hey, as they say, hindsight's 2020.
Hindsight 2020.
But unfortunately, what I did was I spent all that Bitcoin, because after I got it, then I was thinking, where can I use this Bitcoin? Where can I spend it?
Yeah.
So I started Googling for where to spend it.
Yeah.
And there was a sandwich shop in the city.
Yeah.
So I kept, I went there and I was like, all right, I'll have this sandwich. And they make great sandwiches, by the way.
Yeah.
Then I was like, can I pay with Bitcoin? I was like, yeah, sure. They pulled out
Wow.
they pulled out a tablet, and then they gave me the QR code, scanned it. Today's normal. But back in 2013, that wasn't the norm.
Wow.
And I felt really cool, right? Paid for it.
How much in today's money did you pay?
You don't want to know.
Lifetime of sandwiches.
Do you remember how many Bitcoin you paid?
Look,
Or
if
how
I
many-
paid
or,
about $850 per Bitcoin,
Okay.
the sandwich would have been maybe $15
okay.
or so. Yeah. But still, you do the math.
Yeah, that's a very expensive, very, very expensive sandwich.
Yeah. Well, the thing was, I kept going back, right? So.
Okay.
So you spent all his Bitcoin.
You spent a full Bitcoin that month or that couple months on sandwiches. That'd be equivalent today of paying a couple grand for each sandwich.
Yeah.
Yeah. I try not to think about it.
No, you would be painful. But at least you have that story, though.
Yeah.
I would say you're an early adopter.
Yeah.
Right. You're an early adopter.
Yeah.
Right. If you bought your first Bitcoin at $850, you are definitely. I mean, even early adopter. Even if someone's paying 5, 6, 7K, pretty early adopters.
Yeah.
So would you say that when wealth building, the mindset, that's critical? Is it critical, or is it handy, or what level of having risk taking where you're an early adopter versus being conservative and then following the crowd, following the cheap?
I mean, for me, I think like kind of the mindset is that so the idea is not to bet the house on it.
Right.
So if if Bitcoin is risky,
Yeah.
how's $100? How's $1,000, right?
Right.
You're not gonna lose sleep over it goes to zero, right?
Yeah.
But I think the mindset is that you must be very open to the idea, because early adopters basically don't follow the status quo.
Yeah.
That's really where it's at, because he told me about it much earlier, and I was like, nah, come, it'll be the same, because I know, because I'm so good, I know economics, I know everything.
Right.
Oh, it's not going to change the system, right?
Yeah.
Because I was close-minded.
Okay.
Right. But if I'm open-minded to the possibilities it might be, then perhaps I would have looked at it differently, because I got mine, I bought mine at an ATM in 2015.
Okay.
And I think that time it was also a couple $100, like got half a Bitcoin, right? And then I spent it on, again like him, I spent it on a VPN service because I wanted to test it out.
Okay.
Right. So
The
it's
curiosity made you.
well, he forced me.
Oh. Now
Here,
that's
buy
the
Bitcoin
story
now.
now. He forced me. Older brother forced
Yeah,
him.
I'll do it. Right?
A-hole. Oh boy.
That's right. So if and a lot of smart people generally, they're quite set in the ways of how things can be done, but I think it's just having that open. You got to be open to new ideas. It may or may not work, but at least entertain the possibility that this has potential. Right.
Yeah. Okay. All right. Okay. So that's the beginning. That's your one of the early stories. And then how did your journey progress with Bitcoin? Did you start learning more about it? Did you go to events and because now I hear you. I mean, I know that you're a large part of the future growth is you guys bet big on digital assets, right? So how did you go from there to here? What was the process, your mindset, and what made you bet big?
I think coming from traditional assets, or EquitiesTracker, right? We're equities. So equity markets are 400 over years old.
Yeah.
Right. So it's fairly established, you would say.
Right.
A lot of rules and things like that.
Right.
But when they first started, they didn't have none of these rules they have today, right? But when you truly understand how crypto has evolved, you see that it is very disruptive to traditional markets. So for us, betting big is not betting on the tokens itself, but being part of the infrastructure, right? Where
the change makers. What I see, guys, is change makers.
Yeah.
I mean, the first thing comes to mind when I see a little bit, get to learn about what your journey is, where you guys are. I see it as democratizing digital assets. Basically, you're democratizing the entry. Because for me, I even try to start a Coinbase. It's very hard to open an account in Malaysia. It's near impossible. You try a couple times. And I'm probably the norm. I'm not highly technical. Sometimes I had to have a little help at learning. I switched from like Google phone to iPhone. I need a little bit of help. So not probably fairly normal in terms of like technicality, right?
Yeah.
So I see that like you're giving an opportunity to the non-specialists, which is everyone besides the crypto bros, right? I see it's fairly high barrier, technical and all that stuff, and then passwords is all overwhelming.
Yep.
For a guy like me.
Yep.
But with what you guys doing,
Yeah.
You're helping democratize. You're making it available for us to,
And
along with Coin. I would say that you guys by Coinbase of Malaysia, right? My first investment in the digital assets is Coinbase.
Mm.
I did 6 or 7x in
Wow,
like
well
year and a
done.
half. It's okay.
Nice.
But I know, like, I can kind of feel, okay, it's towards the bottom. I bought like, I don't know, roughly 30 something, and sold in 180 to 200 plus. Of course, now it's even further than that, right?
Yeah.
So
Yeah, I mean, for us, when we talk about the infrastructure building,
Right.
make it accessible, but even for the non-tech people,
yeah.
but also more importantly is safety.
Ah,
Because there's so many scams, right?
Oh,
Crypto-related
yeah.
scams, right?
absolutely.
And we knew we wanted to do it right,
Right.
and that's why we are fully licensed. We are compliant.
Okay, what do you mean fully licensed?
So
for the non,
okay,
for the
so
non-financial.
which means that we are
people.
licensed by a government body.
Okay.
For us would be Securities Commission of Malaysia,
Okay.
and
SC.
also
yeah.
offshore it's under Labuan, right?
Oh, okay.
So Labuan Financial Services Authority. So
Okay.
it's legit. It's and on top of that, we are also a public company. So which means that we're very transparent. So you can
Yeah.
check out public accounts, and also all
Okay.
that it's to help, right, the average guy. I say, you know
Yeah.
what, this is a safe. It's a regulated platform. It's
To get comfort.
to get comfort, because you
Yeah.
know, in a world where there are a lot of scams,
Yeah.
right? This is actually very key.
Yeah.
Yeah.
How do you filter? How to filter, right? So you got, okay. So you're publicly listed. You know, ET has been around for what? It's 50 years now. If I do my math,
Yeah, 40,
right?
49 this year.
It'll
Yeah.
be- this year will be
This year.
49,
49,
nearly
yeah.
50 years.
Yeah.
Publicly listed. You guys Sharia compliant?
Yes,
as well?
Sharia compliant as well,
Sharia
yeah.
compliant. So, okay, when an investor is filtering whether they should, it's safe to invest with you guys, you check the boxes, right?
Yeah.
And because I'm on this side, right? I'm
Yeah.
like, okay, gotta check the boxes, and because I know, almost everyone's been scammed, or they know someone close to them that has lost money.
For
it's
sure.
so easy in crypto. That's why it's like
Yeah.
probably got a little bit of a bad reputation,
Definitely.
crypto,
Yeah.
right?
Yeah.
Right. It's
I think to add to that, I mean, scams today or malware, right? As you say, it's gotten really sophisticated, right? They'll send you an SMS with a link that says, I don't know, redeem, your 50 ringgit or whatever, or you have this speeding ticket or this summons that's still outstanding. If you didn't do it, then click on this link and put in your details. As soon as you do that, right, then it does a backdoor or wormhole back into your device, and then it's got access to everything, right? And that's kind of
that's kind of typically how it works, right?
Yeah.
I mean, there's other ways too, like they call you and they scare tactics.
Yeah.
Oh, it's so easy. You see it all the time.
Yeah.
And that's probably the biggest challenge financial community faces, isn't it?
Yeah. Absolutely. Yeah.
So what steps have you taken with regard to securing all that, and how much does it cost? I mean, what have you invested?
Yeah. So I think if you're looking at investing in crypto, right?
Yeah.
We're not saying don't do it yourself. Like, by all means, have a go, right?
Right.
Try it out. You should experience it, because that's how you learn the fastest, right? But what we're saying is, if you're starting to get a little bit more serious about it, or you want to do it in a safer environment, then look for a choice with the least risk, right? Because look, you work hard to earn your money. You don't want that to go down the drain. So some of the infrastructure that we've set up, it's the money's held with trustee.
Okay.
Right. And then obviously we have to use an SC licensed digital asset custodian.
A custodian.
Custodian who then holds the digital assets.
Yeah.
No one person can gain access to those assets anyway. You know, those are some of the things. So you need like a a multi-party. Think of it like a director's check, right, of a company, right?
Okay.
You can't just have one director sign it. You might need 3 out of 5 directors to sign.
Right. Or even any business account.
Yeah.
You got the maker, checker.
Correct.
Yes.
Right.
Yes.
So it's security.
Security is definitely right up there when you think about digital assets, because they're quite different from stocks.
Yeah.
Because you can't just steal the stocks. It's not sorry.
It's tougher.
Before they did it electronically, you could just steal the stock certificates.
Right.
Yeah.
That's right. It's a physical
it was
certificate.
a physical certificate.
Correct.
You could.
So that went digital.
Yeah.
That solved that problem.
Yes.
And now with
Digital assets, it's a little bit different.
It's changed again, right?
Yes.
Because there's the main difference is that there's no recourse. So if there was a mistake with your bank, you could call them.
Right.
There's a customer support; they'll sort you out.
Yeah.
But in crypto, there is no recourse, right? Bitcoin does not have an office or a support line or a care line.
Yeah.
If you send it to the wrong wallet, that's it. Bye bye.
Okay.
Yeah.
All right. Okay. I'm comfortable with that. I'm an investor. I invest in your digital asset. It's a tracker, right? Digital asset tracker.
Yeah.
And then what's the advantage of that your strategy versus just holding or trading myself or whatnot?
Yeah, sure. So I think for one, we take a medium to a longer term view on digital assets. So we view it more as a it's about adoption, right?
Okay.
Technology is always adoption, and the adoption curve takes a while for it to affect, and once everyone's kind of adopted it, then it goes mainstream, and then and you see this rush. Again, if I were to rewind, go back to 1994 or 95 in Malaysia, that was when the internet came to our shores, and people started getting access to the internet, right? 1 out of 10 people maybe had an email address.
Right.
So 9 out of 10 did not have an email address. So it took a while, right? Now think of
for mass adoption.
yeah, from then to now, where we are now, a quarter of a century later.
Yeah, I don't know anyone that doesn't have an email.
Yeah. Right.
That's
or a smartphone for that matter, right? So now, if you think about it,
you can't really survive.
No, where we are today, like you said, you just press a button, food arrives at your doorstep.
Right.
You press a button, transportation arrives at your doorstep.
If you don't have, I know one person that doesn't have a smartphone. American guy, and he's in his 60s. Dumb phone.
Yep.
But he's my close mentor or whatnot from way back when in my sport. We fell out of touch because it's cost me real money to call him. Everyone else I can WhatsApp, I can Facebook, blah blah blah, or even IG has a video call or whatnot feature.
Yep.
You don't pay for phone calls or a video conference anymore.
Yeah.
But because this guy didn't on board, he wasn't open to smartphones. His life is completely different. He can't keep in touch with me as easy. I'll call him once every couple years maybe. He's still alive there, buddy. But that's it. But it's crazy, right? You see the way you see digital assets going that direction.
Absolutely, because you see from where we were to where we are now, where everyone's got almost everyone's got a smartphone and permanent internet access.
Right. Pretty much.
We've come a long way, right? We've come a really long way. And our lives have changed. Our lifestyles have changed. Our expectations of things have changed.
Absolutely.
But in order to get from there to where we are today, a lot of infrastructure had to be built, right? First, our internet was really slow. Even just to download a JPEG file would take
Oh, I
take
remember.
a really long time, right?
I
And now
remember.
we're doing live streams. All right, we're watching
Yeah.
high def 4K videos on
Yeah, I
our
know.
right, and over the air.
Yeah. If it pauses, we freak out, right? I mean, if
Yeah.
it lags,
You see that
we
Yeah.
easy
freak
video,
out and we
yeah.
curse.
Yeah.
That's
You
right.
know, whatever, right? Time.com or whatever. We
Yeah,
curse
yeah.
all these guys.
So
Maxis.
to get from there
Yeah.
to here, you know, we went from
Very
copper
fast.
lines to ADSL, and from ADSL to cable, right?
Yeah.
And then from there, the telco set up. You know, they laid the undersea cables, right, to connect
Yeah.
the whole
Yeah,
globe
yeah.
together. Then they sent up satellites. Then eventually the telcos started putting up 3G, 4G, and now
Yeah.
5G towers, and now they're
Yeah.
talking of 6G.
Oh, really? I haven't heard of
Yeah,
6G
so
yet.
it's that
Wow.
convergence of infrastructure
Yeah.
that happened, right?
Yeah.
The introduction of the smartphone,
Yeah.
right? So all that together,
And now AI too.
and now AI, right?
Okay, do you
Yeah.
see how is AI gonna have a huge effect on digital currencies?
Yeah,
or
look,
digital
so
assets?
so if you notice that trend from what I mentioned, right?
Yeah.
This is a like the story is still being written, right?
Okay,
It's
yeah, of
still
course.
it's still not done.
Yeah.
So once now it's disrupted communications, right?
Yeah.
Or it's broken down the barriers, right? And now it's disrupting, I guess, finance, the future of finance.
sure.
I think you mentioned the democratization of finance, right?
Yeah.
Obviously, you know, throw AI in there, and that's
Yeah.
part of that disruptive force that's gonna continue to change our lives.
Okay.
So, and if you look at our financial system or the finance rails that we're used to, it's still, I mean, it's been around for quite a few decades,
Yeah.
right? Like the SWIFT system, for example,
Oh yeah.
right? Where now you're able to ride the infrastructure that's been built in the last 25 to 30 years, right?
Yeah.
That is the internet. And almost have instant transfer of value from continent A to continent B.
Yeah, I noticed that.
Yeah.
I noticed that transferring money now is not. I mean, used to be waiting for a wire. It's like 1 or 2 days, I think.
Yeah.
Maybe even
Yeah.
3.
Yeah.
Yeah.
Now it's like if it's more than a day, you're panicking,
Yeah.
right?
Yeah.
So it's fast.
Yeah.
Where I think in a very short period of time it's gonna be instant. In some cases, it already is,
Yeah.
but not always.
Yeah.
Right.
Yeah.
Incredible.
Yeah.
Incredible.
I think what crypto has, I think at the core of digital assets is
Yeah.
democratizing.
Yeah.
So anyone with a phone and internet access, or
Yeah.
you know, an app, like, you know, you can join the network very
Yeah.
easily.
Yeah.
So you know, imagine essentially what it can do to today is that like, you know, what they're doing with stable coins, is that anyone in the world can have a US bank account, essentially, right?
Yeah.
And imagine the pain of going through that process with a
Oh.
bank account, right? It's crazy, right?
Yeah.
So yeah, and I think one of the major problems that digital assets or crypto has managed to solve is that how do you make it unique
Yeah.
in a digital space, because digital means you can make multiple copies of it,
Yeah.
and very cheaply with no cost, right? So
Yeah.
then how do you make something digital but it's only unique to that one person, right? Oh yeah.
Yeah, absolutely, absolutely. Okay, yeah, okay. Now I'm thinking from, you know, what should everyone should everyone invest in it, and how much?
So coming back to my first thought process, is like,
Right.
so even if you're
Exposure,
a
right.
major skeptic in
Right.
Crypto, right?
Right.
And say you absolutely don't believe, you think it's a scam or Ponzi scheme.
Mm.
So what if there is a possibility that you are wrong?
Yeah.
So what's your insurance? So if you're wrong that you
You
think
miss-
that it's not going to grow, but you're wrong, actually it goes exponentially in the next 25 years, right?
Yeah, you miss out on huge gains.
Miss out on huge gain.
Opportunity cost.
So the mindset
Yeah.
is that it's like no, but that's what we should, you know, we're on the Olympian mindset, right? So
Yeah.
how do you think different, right?
Yeah.
So
How do you outperform?
how do you outperform? So if even you're that skeptical, and you don't believe in it, but what if there's a slim chance that you could be wrong,
Mm.
then a percentage of your assets or your earnings, right?
Yeah.
Depending on how much risk you can take,
Yeah.
can be allocated to such very, very long term, what I call unstoppable trends.
Yeah.
Right? So because the world doesn't care whether like you said your
You
example,
believe or not.
if you believe or not. So that guy
True.
who doesn't believe with a smartphone, doesn't matter. He's left out,
gone.
right?
He's left out. He's
Correct.
missed out on a lot. Right? Friendships.
Yeah.
Long distance friendships are not really possible.
Yeah, I mean exactly.
Right?
So trends doesn't
Yeah.
matter whether you believe or
Yeah.
not. It doesn't matter.
Yeah.
You are not relevant to that
Yeah, yeah,
equation, right?
that's true. Yeah.
So to answer that question, if you
Yeah.
think digital assets are the future and here
Yeah.
to stay, even if you don't believe in it,
Yeah.
the beauty of it, you can still participate.
Yeah.
I guess the question is, what is your risk level, right?
Yeah.
Yeah.
So anyone that's say, a millennial. What is there any kind of like a ratio they should keep in mind? Oftentimes I hear the most common is like 5%.
Yeah.
5% of your NAV
Yeah.
of your
Yeah.
right? Has that changed? I mean that's global, very widely used, right? With a mainstream financial media,
Yeah.
5%, right? It's kind of like a, right?
I have a different view. So
Okay.
I mean, my rule of thumb is very simple.
Yeah.
So how much can you see your investments drop and you're okay?
Oh yeah.
Example,
Okay.
I'm okay if they dump 50%.
Yeah.
Example,
Yeah.
that will give you a level of idea.
Yeah.
How
So you're
much
pretty high risk. At 50%.
I can take risk. Yeah, correct. 50%, right? Very high
I'm
risk.
85.
Oh yeah, 85. So
I'm
you're
a high risk taker.
Yeah. Yeah.
It's gone down 85 before. Did not change it. Doubled down on the stronger what I think is strong.
What you think is strong, right?
Yeah.
So you would probably be very comfortable putting 85% of what you own into something like that.
Well, okay. So I'm 45. So it's
Yeah.
I would be comfortable probably like 50.
50, right?
Because I do love equities.
Right.
I'm growth, right?
Okay.
Because I'm a little bit in here as Warren Buffett.
Okay.
And it's got to be, making value that's
Yeah.
easy to see making
Yeah,
value.
yeah. Okay.
you know?
Okay.
Not the store of value or, too early, right? So
So I guess to balance it out, if you can only
Yeah.
see your thing drop 5% and you get scared, so
Yeah,
maybe
okay.
5% is the limit,
that's it. Okay.
right? If it's
So if you,
You
see
can only see
dropping
1%,
50, then you do 50.
yeah. Well,
Okay.
if you can take,
Yeah.
if you
That's
can
good
only
one.
take
Good rule of-
5%
Good rule of thumb.
drop, right? But
rule of
max you're
thumb.
going for is 5, right? If you can only
Okay.
do 1, then if you can take 0, then 0, right?
Okay.
Yeah.
All right.
So my metric would be whatever that limit is,
Yeah.
where you can still sleep at night.
Okay.
So if you find that you can't sleep at night, you've probably gone in too much.
Yeah.
You're in too deep.
Funny when I think about so when one of my assets drops big and I try to understand why, I get excited.
Yeah.
I love on sale what? I love sales,
Yeah,
right?
yeah,
Hey,
yeah.
just like when I found out when moving to Malaysia,
Yeah.
hey, actually are you gonna find, right? You just wait till 50% off or 80% off.
Yeah.
I was like ecstatic. I told all my friends in Australia, I'm like, hey, over in Malaysia you can it's speed, right? And you get a ticket, you just there's a discount. They have sale season. Imagine that. They have Black Friday for speeding tickets. And they tripped out. All my American and Aussie friends, right?
Yeah.
So I see his discount, right? But most people don't. Right?
Yeah, of course.
They're like, oh no,
Yeah.
I took a hit. Oh, they're like, oh, it's painful.
Yeah.
Correct.
Maybe I should be a little bit more balanced. And
Well,
it's a little bit too crazy, right?
I mean, that's why you're Olympian, right? You are one of very few human
I
beings
can
on
cut
Earth.
pain, bro.
Right,
Pain. So okay, let's talk about high net worth, right? What telltale signs in the market do high net worths monitor that retail often miss? Because we're looking at the mindset between,
Yeah. So I think maybe I'll start. I think for us, for our clientele, it's very clear. So the those who are wealthy, that means they put some deposit substantial amounts with us, and those who deposited less with us. With every market downturn, none of our wealthy clients, they don't even call me. They don't care. They
because they're long. They're big picture. Wealthy people are big picture.
They think long term. They know markets go up and down. Right. You know, they will. You know, they don't even know the market. They don't care. They're long, right? And then we have smaller investors, right? And market drops 5%, 10%. What happened? Did you do something wrong? You know what's going on? Is someone
freak out?
They freak out, right? So, maybe
because they traded time for money too. Is that how you find that?
Well, I mean,
as well.
I mean,
right?
But you know, even for customers who don't trade time, who trade time for money, and they can think long, and they can think wealthy, there is a huge difference in the behavior.
Difference.
And then these are the average, you know, we call retail guys that pull out when the markets come down, and then FOMO in when the markets go. We see it all the time, every cycle.
You know, Rich Dad Poor Dad. I got Poor Dad. My dad has degrees, PhD, a couple masters. Right. He was smart. He's smart. He got onto Tesla, 2017.
Wow.
He went all in on Tesla, and then it hit. I think there's a time it hit. We went down before the pump. It dropped. I don't know, 30%, 20%. Got scared, liquidated. My brother, who listened to him, went all in on his whole life savings. I think it was 40 grand USD or whatnot. He forgot about it. Guess what happened? My dad had major regret. And my brother still has it. He's like, whatever. You know, so I find that even the clueless, who he just like forget about. He's a perfect example of. Sometimes the best investors are the ones that forgot about their investment.
Their investments.
He basically forgot about it. And now that's like 15x or more. Right? That's funny, right?
Funny. I mean, it's
and even a smart, super duper smart guy, intellectual, because of the emotion.
The emotions, man.
Right? So just because the wealthiest people aren't the smartest.
No. Not necessarily.
That's what I learned. That's what I take away.
I agree.
That's giving me hope.
I'm
a uni dropout, man. So if it did, I have no hope. Oh, man, forget it. Don't even try. I'll be poor for the rest of my life.
No, you're right.
But mindset, that's why I'm like, okay.
Yeah. Not necessarily the book smartest, but I mean, they're smart in their own ways, for sure. I mean, resourcefulness and things like that.
Smart, too.
But we see a huge mindset. You know, they're the same guys. They probably live in the same postcode. You know, but they behave so differently.
Yeah, right. Exactly. Yeah.
You know, one of the things that we track in crypto, so we look at a lot at on-chain metrics. So this is something that traditional finance guys don't look at. But on the blockchain, it's actually very transparent. So you see what the big wallet holders are doing. So if you have anywhere from 10 Bitcoin to say 1,000 Bitcoin, we can track their behavior. And then you've got like the tiny little ikan bilis, right? You've got 0.01 Bitcoin to 2 or 0.3. And oftentimes you watch them, they're doing exactly the opposite. The whales are buying, and the ikan bilis are selling to them.
Interesting,
right? So often the whales are like when prices are coming down, the small guys are always selling, and the big whales, they're just accumulating. And then when it flips and the price is going up, the big whales will be selling, and the small guys will be buying. It's so clear and
it's
evident.
Same with stock, isn't it?
Yes,
because it's the mindset,
it's the mindset,
right?
Absolutely.
So I see that too, and it's kind of manipulated. I don't know about crypto, but with equities, I see so much manipulation by the smart money. They put out their targets. They manipulate with articles, and then but they're doing something opposite because they have to file their what do you call? They have to file their purchases, right?
Yeah.
It's like, okay, they're downgrading, but then why are they buying in the background? It's like, what is going on?
Watch
right?
what they do, not what they say, right?
Right. So
Yeah.
this same thing apply with
Yeah.
it's the digital assets, right?
Yeah, I mean, because it's humans, right?
Yeah.
Emotions can play, right?
Yeah.
So it's so predictable.
Yeah.
Yeah.
Okay, but lately there's been a couple whales moving 10,000, right? Selling, either moving or selling. You don't know if they're just moving a different wallet or
Yeah.
any
So apparently,
idea what's going on?
that wallet
There's been a
hasn't-
couple
It hasn't been touched for 14
years, right?
or something.
No, there's a
like
couple
that.
wallets
Yeah,
too. There's
yeah.
not just one.
Yeah.
I've read.
Yeah. And I think I read they would have gotten in at less than $1
Crazy.
per Bitcoin. And,
Wow. Yeah, because it's like 10,000, right?
They'd be in the billions or
Yeah.
something. 8 point.
But what
something.
kind of mindset would be able to have that much
Holding power.
no,
discipline.
not holding power, but their mindset were like, man, majority of people would have already spent some of that,
Yeah,
right?
yeah,
Would
yeah.
have touched it long time ago, buy houses, buy holidays, jets, or
Yeah,
whatnot.
Yeah.
But that is just some really, really disciplined
Yeah.
person, if it's even a person.
Yeah.
Yeah, you think about that.
Yeah.
Yeah.
That you still have it despite how much is going on and how much has gone up.
Tremendous willpower. I think it's.
What
I think
is-
it's not. I think it's not.
They're probably a billionaire already, or if it's a government that own it.
Oh, yeah.
I don't know.
Alright.
I'm just trying to think what's going. Yeah, like
Yeah.
how?
That or they lost their keys and then they
And then they
they,
found
they,
it.
Yeah, they found it.
Right. Or they've been digging in the in
the dumps,
in the
right?
dumps.
Yeah.
You know that one,
Yeah,
right?
Yeah.
I think he finally gave up recently.
Yeah. I mean, it's. I mean,
Craziness.
could be, and I guess it's also conviction unless it's really like absolutely convicted.
They know also where is
yeah. And then
they
maybe-
know also where it's headed, right? So
Yeah.
they don't want to spend on the sandwich money today.
Yeah.
Oh man. Okay. Well, that was great insights, guys. Okay. Can you share a simple valuation mindset that served you well?
Valuation. Well, I always try to get always get a little buzz if I can get something not cheap,
Right.
good value.
Good
That means it's selling below what I think it's worth.
Yeah.
That always gives me a kick, right? Anything you
yeah.
do, right?
Good bargain, right?
Yeah, good bargain, right? Not necessarily cheap, like because
Yeah,
people
yeah.
think it's like there's a difference between cheap and undervalued.
Undervalued.
Yeah. So imagine. So if Bitcoin has a market cap of 2 trillion,
Yeah.
then what is the market cap of gold? So
Yeah.
I think it's around 22.5
Okay.
trillion or so.
Yeah.
So
11x.
Yeah. So what
Okay.
if Bitcoin, for example, would move to
Yeah.
it's
on
says
parity. Parity.
on parity.
Okay.
So how many times would
that's
that
the
grow
potential
for-
there, right?
Yeah. And the reason
Okay. That's over $1 million
Yeah.
per
Yeah.
Bitcoin.
yeah
They've often
they've
with
talked
the-
about it.
yeah.
Yes. Yeah.
the bulls.
And I mean there are many valuation models that you can look at it. For example,
Okay.
like if you look at the total amount of currency in the world, for example.
Oh yeah.
Because as they say, they keep printing money, right?
Yeah.
Whereas Bitcoin is
Yeah.
has a finite number of Bitcoins.
Yeah.
So it's almost like a financial black hole, right? You can, as much as you can print, it can absorb.
Mm.
It's often been talked about where Bitcoin is the counterweight to
fiat.
to fiat money printing,
Yeah.
right? So you
Yeah.
can so those who may be afraid of losing their purchasing power,
Yeah.
then they counter that by buying more
Okay.
Bitcoin. Right?
Okay.
And you
That
kind
makes
of think about it to add to that, like You see, every time gold prices go up,
Yeah.
then gold mines, those that were not profitable before at lower prices, they start springing up. So then you get increased supply, right? So gold always has that increased supply.
Yeah.
But I think the big difference is that Bitcoin is a fixed supply. That
Yeah.
means we already know how much you're going to get. So just because the price goes up does not necessarily mean more supply coming in.
Yeah.
Yeah.
Yep,
So
yep.
that
Okay.
helps the price even more, right? Or
Yeah.
scarcity.
Yeah.
Yeah.
Well, it's I guess it gets more predictable, the cycle. I
Yeah.
guess they've already have a developed cycle for crypto, right?
Yeah.
For Bitcoin.
Yeah.
Oh, that's interesting. Okay. All right. How do you balance innovation and caution? Because you guys are doing something first mover. I would say one of the first movers in Malaysia and even regionally, right? How do you balance innovation and caution? Or is that dictated for you by SC?
Yeah.
Right?
Yeah.
Right?
Well, we always ask them for permission first
Okay.
before we,
Okay.
we don't want to surprise them
Right,
with
of course
anything.
not.
But
Yeah.
we I mean, they've been very engaging and they're willing to listen, and
Okay.
I think that's a positive step.
Yeah.
So I think caution is a must for us because we are handling our customers' hard-earned money, so we have a major duty of care.
Oh.
So we can't just let's scramble a couple of things, let's roll.
Yeah.
Because there are many layers of checks and balances that we have to comply with anyway.
Well, okay.
So I think that
Compliance.
compliance.
Yeah.
So the caution is always there, like it's a constant, right?
Auditing too. Have to go through
audit,
right?
So the innovation still needs to go on, but we always try to engage our stakeholders, like the regulators, to make sure that they're comfortable, they're okay. Stick in your lane, right?
Okay. Yeah.
And then move on from there, right?
Okay. All right. Thanks for that. What separates those who see digital assets as speculation from those who treat it like real wealth?
Yeah, look, I think what divides them is probably sufficient education and understanding of what digital assets are.
Yeah.
What they do. I'll tell you what they're not. They're not a company, so you can't use your the metrics that most investors are used to try to measure or try to value, give a valuation to what digital assets are. Look at them for what they are, what problems they solve. It's definitely not a company, so there's no cash flow, there's no P&L, there's no balance sheet. And those who
so there's challenges.
Right? Yeah, there are.
For early adopters.
There are.
Right.
I guess in order to understand digital assets, you'll have to be what's that word, a polymath, right? So you have to know a few topics quite well. Computer science is one of them. Economics, game theory, right?
Basically, what everything that you went into. I mean, that's the
because once you see it and once you get it,
right,
it's a no-brainer, right?
Oh yeah.
I mean, if you think about it, in the early days when Jeff Bezos said, "Hey, I'm gonna sell books online," and you've got these mega huge bookstores around, right?
They're laughing at him.
They're laughing.
Amazon.
Yeah.
I mean, Amazon. What's the other? What their rivals with?
You don't even remember the name.
I don't remember any.
Barnes and Nobles.
So that's
Yes,
right. That's
yes,
it. That's
yeah,
it. Barnes
yeah.
and Nobles. I used to go to that all the time, right?
Right, and then Nvidia in the early days, right?
Yeah.
Right. I mean, if they're like, I mean, you could not have fathomed that they would be without them. There would be no AI chips today, right?
Yeah.
So,
right.
Yeah.
Totally. Yeah, and then now with but I think with AI, everyone buys into that early, right? Because you see right away, it's like, ooh, it's really changed the game of everything.
Yeah.
Almost too good, almost too well, right?
Yeah.
Insane.
So between so if you see it as speculation versus seeing it with conviction.
Yeah.
That look,
That's
that's going to be the future, right? Like,
Yeah.
I mean, okay, look, if we, and Alvin hates this, but this is my favorite example, right?
Yeah.
In the day of the horse and carriage, right?
Oh yeah.
Like, and someone invents the car.
Yeah.
They're like, well, what's the point of a car? You got to refuel it, right?
Yeah.
You can put it higher.
You got to refuel it. You got to.
Yeah.
There are no roads, right? Oh,
Yeah.
what are you gonna drive the car on, right? There's no infrastructure to support the car.
Right.
So why do I need a car? I don't need a car, right? I've got perfectly well fed horses. I've got a nice custom carriage.
Yeah, I know.
Why do I need a car?
That's a perfect one. How come you don't like? That's a good example.
I've heard it for the last 10 years.
That's his sales pitch on crypto, horse and carriage.
Yeah.
That's hilarious.
And, talk about engines, why it's still horsepower today, because you still make reference.
Yeah,
Yeah.
so
Okay,
how do we
yeah.
measure the power of an engine, right?
Yeah.
Horsepower.
Yeah.
So it's a link to the past,
true.
right?
That's
To
true.
where we came from.
Oh, that's brilliant, right? Okay, so if crypto is now a car, what is ET? You saw this one coming. What is ET?
Well, we could be one of the. So we're building infrastructure, right? That's effectively what we're doing. And we talk about the future of finance.
Yeah.
So we're building future next gen financial infrastructure.
So you the Tesla
We're
of
probably building the roads, right? We're building
infra.
the
Tesla,
highways.
because Tesla, they have
yeah.
the supercharged infrastructure in the US.
Yeah.
Right?
That's
Or Neo.
That's your favorite, right?
I guess we are. I mean, if you look around today, and you ask 10 people,
Yeah.
what's your banking experience like?
Yeah.
I'm quite sure 9 or 10 out of 10 people say it's not the best banking experience, right?
Yeah.
So and because traditional banks they only handle fiat and traditional assets, we believe the next gen banking experience will need to also include crypto,
Right.
and because if you are very successful in building traditional infrastructure, does not mean that you can also build really good crypto infrastructure, because it takes time to learn and understand and all that, right? So we see ourselves as next gen banking experience. Yeah?
Okay.
Yeah.
Next gen banking experience or next gen private banking.
Yeah.
That kind of.
Yeah. Right.
Well, that's interesting. All right. That's a good one. Okay. So with the EquitiesTracker's new digital asset tracker is regularly managed. We already talked about that. But what's the gap that it fills? What's the gap? Crypto bros? Probably not, right?
Well, I think it fills the gap for maybe crypto bros, to be honest.
Okay.
I think crypto bros kind of go through a certain life cycle, right? You'll start off with maybe not much, but then you happen to hit a meme coin or something that was trending, and you did a 500x, right?
God,
and so
if only.
and so now you've made it.
Yeah.
But then you've got very low OPSEC, or you got lucky, right? So you got lucky. So now you have a lot of money that you're managing yourself, that you're holding on to yourself.
You ain't gonna get lucky again.
On your laptop.
Yeah.
That you're not really sure if there's a backdoor or not, or any malware on.
Right.
What do you do?
The risk management.
Hey, that's a good one.
Right.
That's a good one.
So we don't exclude the crypto bros. Eventually the crypto bros will get there, right? They'll get there, and then they're like, oh, hang on, I need better security. I need
Traditional assets.
Yeah. I need someplace safe to maybe put it, or I might want to convert some of my crypto earnings into something safe, like some
Stocks.
dividend yielding
Stocks,
stocks.
yeah.
Okay.
Right?
Dividend yield. Yeah.
Yeah. So
Yeah.
I think it's where you are in that life cycle.
Okay.
Yeah.
And in real life,
and in real life,
how
yeah,
many
yeah,
kids you got, or
yeah,
where
yeah,
they
yeah.
are,
That's
right?
right.
Right.
Yeah.
Okay.
What your needs are.
Okay. Okay. Now, how about what would you tell the 25-year-old that has no assets, not a big tax return, right? Barely getting by, but mindset, he's like, I gotta build I want to build wealth. I want to build generational wealth. But you need money to make money.
Well, I think I mean for a 25-year-old, he's got a lot of human capital.
Okay.
Maybe smaller monetary capital, but
Right.
long human capital, right?
Hmm.
Which means time.
Yeah.
And you can't buy, if, as rich as you guys can't buy extra time, right?
Yeah.
Would be, find a way where you can provide value, with other people's money, OPM, right?
OPM. Yeah, I've heard
right.
Yep, heard of that.
Plug yourself into places where you could be of service, or get
Right.
closest to where wealth is circulating, right?
Yeah.
What they call it, the
The Cantillon effect.
Cantillon effect.
Yeah,
Yeah.
Right.
that's right. Yeah,
Get closer to where that's happening.
Yeah.
Find out also how it works,
and
how money works,
correct.
right?
OPM, right?
OPM,
Yeah,
and OPE,
OPE.
other people's effort,
Yeah,
build
leverage,
teams,
leverage. Yeah,
build teams.
Yeah.
Yeah.
Yeah. I think the first one comes to mind is probably like network marketing,
Yeah.
MLM, so to speak, or
Yeah.
whatnot. But
Yeah.
then you have to filter what's
Yeah.
good and what's bad,
Yeah.
what's scalable, right?
Yeah,
Like,
yeah.
I found, I've done a lot of research on that network marketing model. Great. I mean, probably similar to unit trust or insurance or real estate.
Yeah.
Similar skill sets.
Yeah.
Right. But everyone can get into it. The challenge is everyone can do it. Saturated.
Yes. Very
So how does one navigate? What is a good opportunity?
I think crypto is creating a lot of new opportunities.
Yeah.
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 I once read a very smart person said that crypto has added no value. No, actually, crypto has added a lot of jobs,
Yeah.
and companies, and they've created a lot of wealth. Actually,
They just don't know about it.
they just don't know about it, right?
Absolutely, yeah.
So I think, and because we're in such early stages in crypto,
Are we still? You still consider early stage?
very early, because it's not hit mainstream yet. So we're
Yeah.
probably,
Yeah.
somewhat
Yeah.
between early adopters and,
But-
not definitely not mass adoption.
But
yet.
traditional bankers now accept it as legit. Like Jamie Dimon's probably the most well known.
Well, he used to call it a scam and
Right.
a Ponzi scheme,
Right.
right?
So now he's changed his tune.
Yeah.
In recent years.
Yeah. So, but I don't think it's hit like mainstream.
Mainstream.
Like everyone
Still got a ways
with
to
will hit mainstream
Yeah.
when EPF says that they're gonna put a allocation into crypto.
Ah.
Right. We're not hit mainstream yet, man.
We're still
far from
early.
it.
We're still
Okay.
early. Yeah.
Okay.
Yeah.
Oh, EPF would be a good benchmark.
And EPF
Okay.
is so safe, right? So
Yeah.
EPF only started buying foreign stocks
When?
probably about 10 years ago.
Oh, serious?
Yeah, so it's only about 10 years ago they started diversifying outside of Malaysia. I mean they've done really well, but
Yeah.
they go in there when it's really mainstream kind of thing, right? So
Yeah.
yeah,
Okay.
give an example as an example.
Yeah.
Right.
Uh-huh.
These are not institutions that will be gunning to be the first. They'll never be. I mean, everyone take the first step first,
Yeah.
see what happens, and then we'll come in.
Okay.
Yeah.
So still early adopter. So if you want to navigate, okay, then basically just sell crypto unit trusts.
I mean, yeah.
If
If,
they're-
I mean, if you talk about
yeah. Right?
Yeah.
Because I'm going back to OPE,
Yeah.
OPM, be early adopter, sales skills.
Yeah.
right? Build a team. Okay.
Yeah.
Unit trust. It's
Wow.
crypto.
There's no
It
unit.
doesn't exist yet.
Yeah,
right?
there's no unit crypto
Right.
trust per se here.
Right.
But I mean,
Similar.
similar. I mean, first mover advantage.
Okay.
It's new.
Okay.
You always want to be sailing
Yeah.
towards where the wind is behind your back.
Yeah.
You want to do the blue
Yeah.
ocean thing and all that.
Yeah. Yeah.
Yeah, I mean, crypto's pretty
Yeah.
blue ocean right now. Yeah.
And are there any opportunities?
Oh, can
With
always
you
come and talk
guys?
to us at
You
Equity
guys talk
Tracker.
to you? All
Yeah.
right, here we go.
Yeah.
Talk to you guys. Okay.
Yeah.
All right, that's good. So, 25-year-olds that are looking for opportunity to grow their wealth from nothing, leverage, OPM, OPE, and be an early adopter. And come talk to you guys.
Yeah, come say
EquitiesTracker.
hello. Yeah, visit our website.
Come say hello. Okay.
Yeah.
And this is a nice, great office that they can come say hi, right?
Yeah.
Cool.
Absolutely.
All right. Okay. This has been fantastic chat. I want to wrap up with our Olympian Mindset round
Right.
of rapid fire
You want
questions.
to go first? Or you go first.
All right. Okay, it's got 6 questions.
Okay.
One investing habit to adopt today.
Consistency.
Consistent. One habit to adopt. Consistent with.
Starting as soon as possible.
Starting as soon as possible. Okay. Mistake that doubled as a mindset lesson. What's one mistake that doubled as a mindset lesson?
Mistake. Don't let others tell you why or what not. Like, you shouldn't be doing that when you've set your mind to it. Like,
Stick to your original goal.
stick to your If you have
Alright.
conviction, if you believe enough in what you do,
Yeah.
I mean, look, you're a fantastic example of that, right? You
Yeah.
have conviction in
Right.
in something, then
Right,
you just
too-
go for it.
Too deep.
You go all
conviction.
in.
Yeah, that's all. That's true. Okay.
Yeah.
Greatness and wealth definition. Okay. Someone wants to achieve greatness in wealth. What's your definition?
Patience.
Patience.
Oh. Consistency.
Consistency and
Yeah,
patience. No, I like that.
His answer's consistent he's consistently
He's
answering
Mr.
consistent.
Consistent.
I've been quite consistent.
He's Mr. Consistent.
Yeah.
You're Mr. Patient. I know how to race go-karts with you guys now. Okay, advice to your 25-year-old investor self. What would you advise him?
If I were 25,
You,
talking to my 25-year-old self,
Your 25-year-old self.
go all in on Bitcoin.
Hey, Bitcoin didn't exist when you're 25, did it? Okay, for yourself.
I would go all in on Bitcoin as well.
Yeah, go all in on
Yeah.
Bitcoin. I like that. Okay. One metric you still track daily. Oh, you still track daily.
I don't track investments on a
Oh, you
daily
don't?
basis.
Okay.
Not prices.
Really?
Ignore
Okay.
all that.
I do.
Because it messes your mind and it's
Oh, really?
emotional. No, yeah.
I do because, okay. It's like my baby.
I try to avoid that.
Okay.
I-
That's good.
I check the first thing I open my eyes in the morning. I check the price of Bitcoin.
You okay?
Yeah, and then I go on X to see what happened the night before.
Okay.
It's not so much
Yeah.
a metric per se
Yeah,
as to
yeah.
whether to make a trade or not.
Yeah. You just need
it's-
to know where
it's-
you're at.
Well, you
Right.
want to know because the price of Bitcoin is also a metric for sentiment.
Oh, yeah. Sentiment's
Yeah,
important.
it's
That's true.
a measure for sentiment of the
Yeah.
crowd.
Yeah.
Yeah.
That's a good one.
Yeah.
I like that one. Okay. Last one. Mindset traits separating wealthy and winners from wannabes. The mindset trait.
I think the wealthy think long term, like
long term.
long. They take a 25-year view.
Long term.
Yeah.
Yeah. It would be generational. You'd be thinking generational wealth rather than
Super long term.
Yeah. Like
Okay.
it's not about just this generation. How am I gonna get rich?
Yeah.
How are my ancestors gonna stay rich, right?
Yeah. How am I going to take like with Chef Juan when we recorded? It's like how am I going to take care of my family generations?
Yeah,
So generational
Same
wealth.
mindset.
Yeah.
Because I'm always trying to connect with everyone.
Yeah.
And that's a wrap. Thank you very much.
Thank you. Thanks for having
Guys.
us.
Thanks for having us.
Fun.
Yeah.
Really fun.
It's good.
All right.